1. Primary security means Option A, security in the form of equitable mortgage of land. Option B, security which has been created out of bank finance. Option C, security in the form of third party. Option D, security in addition to security which bank has financed. The correct answer is option B, security which has been created out of bank finance. 2. Which of the following is not a document of title to goods? Option A, bill of lading. Option B, railway receipt. Option C, dock warrants. Option D, airway bill. The correct answer is option D, airway bill. 3. While making an advance against bill of lading, the banker must ask for Option A, original copy of bill of lading. Option B, duplicate copy of bill lading. Option C, duplicate and triplicate copy of bill of lading. Option D, all the negotiable copies of bill of lading. The correct answer is option D, all the negotiable copies of bill of lading. 4. Mr. A requests XYZ Bank for a loan of 2 lakh rupees against shares of that bank itself having market value of 5 lakh rupees. The bank can Option A, grant the advance after approval of their controlling office. Option B, grant the advance after approval of RBI as required under Banking Regulation Act. Option C, grant him advance only up to 25% of the market value. Option D, none of the above. The correct answer is option D, none of the above. 5. As per guidelines of RBI, banks can grant advance against marketable corporate securities in dematerialized form for genuine personal needs to individual customers not exceeding Option A, 10 lakh rupees. Option B, Rs. 20 lakh. Option C, 5 lakh rupees. Option D, 50 lakh rupees. The correct answer is option B, 20 lakh rupees. 6. The minimum margin to be kept in the case of advance against shares in dematerialized form is option A, 20%. Option B, 25%. Option C, 40%. Option D, 50%. The correct answer is option D, 50%. 7. Which life policy would you prefer while granting advance against it? Option A, policy issued under Married Women's Property Act. Option B, endowment policy. Option C, education policy. Option D, whole life policy. The correct answer is option B, endowment policy. 8. Amount of advance against life insurance policy is sanctioned by considering Option A, surrender value of policy. Option B, the premia paid by the insured person. Option C, the sum assured. Option D, repaying capacity of the borrower. The correct answer is option A, surrender value of policy. 9. Advances against supply bills are treated as Option A, partly secured. Option B, fully secured. Option C, clean. Option D, pledge advances. The correct answer is option C, clean. 10. Documentary bills are the bills which are Option A, accompanied by documents of title to goods. Option B, accompanied by demand promissory note. Option C, payable after a certain specified period. Option D, accompanied by invoice and bill of exchange. The correct answer is option A, accompanied by documents of title to goods. 11. Provisions relating to guarantees are given in Option A, Transfer of Property Act, 1882. Option B, Indian Contract Act, 1872. Option C, RBI Act, 1934. Option D, Banking Regulations Act, 1949. The correct answer is option B, Indian Contract Act, 1872. 12. The number of parties in the case of a contract of indemnity and guarantee respectively are Option A, 2 and 3. Option B, 3 and 2. Option C, 3 and 3. Option D, either option A or option B. The correct answer is option A, 2 and 3. 13. A contract of insurance is a contract of Option A guarantee, Option B indemnity, Option C both Option A and Option B, Option D none of these. The correct answer is Option B indemnity. 14. In case a banker releases the principal debtor from liability, Option A the banker cannot recover amount from guarantor as he is also discharged of liability. Option B the bank cannot recover amount from guarantor as guarantor's liability is coextensive with principal debtor. Option C the bank can recover amount from guarantor as guarantor's liability is independent of the liability of the principal debtor. Option D the bank cannot recover amount from guarantor but guarantor's property remains liable for repayment of loan. The correct answer is Option A the banker cannot recover amount from guarantor as he is also discharged of liability. 15. In case a loan is repaid by the guarantor on default by the principal debtor, the guarantor. Option A can recover the amount from principal debtor. Option B is entitled to all securities in the possession of the creditor. Option C can recover the amount from principal debtor but is not entitled to securities in the possession of the creditor. Option D both Option A and Option B above. The correct answer is Option D both Option A and Option B above. 16. In case of default by the principal debtor, the bank, creditor, can file a suit. Option A first against the principal debtor and then against surety. Option B both principal debtor and surety simultaneously. Option C not necessarily against the principal debtor. Option D either Option B or Option C above. The correct answer is Option D either Option B or Option C above. 17. A bank guarantee covering a single transaction is referred to as Option A specific guarantee, Option B performance guarantee, Option C deferred payment guarantee, Option D fixed guarantee. The correct answer is Option A specific guarantee. 18. A continuing bank guarantee is one which Option A continues till revoked, Option B covers a single transaction, Option C covers a series of transactions, Option D cannot be revoked. The correct answer is Option C covers a series of transactions. 19. Deferred payment guarantees fall in the category of Option A performance guarantees, Option B counter guarantees, Option C bid bond guarantees, Option D financial guarantees. The correct answer is Option D financial guarantees. 20. In the event of guarantee issued by the bank being invoked, the bank should make payment. Option A after obtaining permission from next higher authority. Option B after obtaining approval of their advocate. Option C immediately unless restrained by the court of law. Option D after obtaining consent of principal debtor. The correct answer is Option C immediately unless restrained by the court of law. 21. The liability of a guarantor under the guarantee. Option A arises even if the borrower is not asked to repay the borrowings. Option B arises after bank has exhausted all remedies against the principal debtor. Option C is coextensive with that of the principal debtor. Option D is crystallized the moment the advance is disbursed. The correct answer is Option C is coextensive with that of the principal debtor. 22. Counter guarantee means Option A guarantee obtained from a third party. Option B guarantee executed by the borrower in favor of the bank at whose instance BG is issued. Option C intimation regarding cancellation of the guarantee issued by the bank. Option D letter issued by the beneficiary confirming receipt of guarantee document. The correct answer is Option B guarantee executed by the borrower in favor of the bank at whose instance BG is issued. 23. Negative lien means Option A, right of the banker to convert hypothecation into pledge in the event of borrower's default. Option B, a declaration from the borrower to the effect that assets offered as security are free from any charge or encumbrance and that he will not create any charge over them without permission of the bank. Option C, as good as lien. Option D, all above. The correct answer is option B, a declaration from the borrower to the effect that assets offered as security are free from any charge or encumbrance and that he will not create any charge over them without permission of the bank. 24. On which of the following securities charge can be created by way of mortgage? Option A, stocks. Option B, land and building. Option C, debtors. Option D, vehicles. The correct answer is option B, land and building. 25. The charge on a movable property can be created by option A, pledge. Option B, hypothecation. Option C, lien. Option D, mortgage. The correct answer is option D, mortgage. 26. Pledge is defined in option A, Indian Contract Act, 1872. Option B, Transfer of Property Act, 1882. Option C, Negotiable Instrument Act, 1881. Option D, Limitation Act, 1963. The correct answer is option A, Indian Contract Act, 1872. 27. Hypothecation is defined in option A, Indian Contract Act, 1872. Option B, Transfer of Property Act, 1882. Option C, Negotiable Instruments Act, 1881. Option D, SARFAESI Act, 2002. The correct answer is option D, SARFAESI Act, 2002. 28. Mortgage is defined in option A, Indian Contract Act, 1872. Option B, Transfer of Property Act, 1882. Option C, Negotiable Instrument Act, 1881. Option D, Limitation Act, 1963. The correct answer is option B, Transfer of Property Act, 1882. 29. Pledge, which is defined in Section 172 of the Indian Contract Act, 1872, means option A, bailment of goods. Option B, bailment of goods to guarantee a loan. Option C, bailment of goods as security for payment of debt or performance of a promise. Option D, both option B and option C above. The correct answer is option C, bailment of goods as security for payment of debt or performance of a promise. 30. Which of the following statements are correct? Option A, every bailment is a pledge. Option B, every pledge is a bailment. Option C, pledge can be created in respect of book debts. Option D, both option A and option B. The correct answer is option B, every pledge is a bailment.